What is going on, guys? Ricky in the Flip Lab. Today I'm here with Jerry Norton. Pleased to have you here, man. You've been a huge inspiration of mine, and I know you come a long way from Puerto Rico, where you're living out now.
Just to see you, Ricky.
Right? Just for the podcast. So happy to have you on, man. Really great seeing you.
Thank you for having me. Excited to have this conversation.
Yeah. So I want to kind of get into, right now we're at the beginning of 2023. And I know you on your YouTube channel, you educate a lot about wholesaling. And over the past year, like wholesaling's gotten pretty difficult to do as far as like finding good deals.
Yeah.
So where are you kind of pivoting your business right now, and even your coaching? How has that changed as far as adapting to what's going on in the market right now?
Well, I think that's the main point, is that you need to be adjusting. Right? And so I think a lot of people, when they get into this business, they don't quite understand that the market's going to ebb and flow, it's going to up and down, and you have to embrace that. If you want to really win at this business and really be successful as a transaction company, be doing wholesaling, doing flipping, if it's a buy and hold strategy, maybe not so much because you just ride things out, but as a flipper, wholesaling or fix and flipper, you really need to embrace the idea of change in a market. And the more willing you are to embrace that, meaning you thrive in that environment. So when the changes are happening, you're actually quick to change. You're actually quick to implement. You see doors close and then doors open. If that's an environment that you like and you thrive in, you're going to do so good in this business. Because what it means is, if you can be the early implementer to adjust, then you're going to be the fastest one to the new opportunities, and you're going to make a lot of money.
Sure.
And you're going to be really successful. And so I've noticed that when I first got started a long time ago. It's almost been 20 years since I got into real estate, started wholesaling. And I saw the really successful investors. That's what they were. They were really quick to adapt. And so I learned early on that I've got to always be looking kind of in the horizon, like, where are we going? What things are happening? What things can I anticipate? What changes can I see right now that I want to be ready for, so that I can pivot quick? And so I try to stay super nimble. Like, I want my business to be very lean and very quick to pivot. So if something's working really well, I'll completely shut that down no matter how much money it's made me, if it's no longer an opportunity, if it's no longer working. Like, I'm not the guy that's going to sink with the Titanic.
Right.
And I see people doing that right now. I see flippers right now who can't sell properties. And so what are they doing? They overpaid, they over-renovated when the market was hot. They don't have all that ride and appreciation. Now they can't sell. And if they want to sell, they're going to lose $40,000, $50,000. And they're doing it. They're writing the check. They're losing the money. They're stiffing their lenders or whatever they're doing instead of adjusting. So I've got a couple deals that aren't selling, and now I'm getting creative on how I'm going to sell. I'm going to hold those. I'm going to do different things because I'm just willing to adapt.
Sure.
So I think first thing I would say, we can drill into some details, but I would say be super nimble and willing to adjust. What you were doing that was working in the past 2 years isn't going to work as good right now. Be willing to say, what do I need to do to change and adapt so that I can continue to succeed?
Yeah, I know. Like, I even had a buddy who was about to lose $60K on a flip in Tempe. And instead, I was like, why don't you move into that and rent your primary house in Scottsdale, which no HOA, great Airbnb, or even a rental. So he ended up renting that out for like $3,500. His mortgage was like $2,000.
Yeah.
And he moved into the new house and avoided losing $60,000. So
Well, you don't lose the money until you sell.
Right.
So what can you do to not lose that money, right? So I'll give you an example. I've got a deal in Michigan. I do a lot of deals there. It's where I started. And so I buy it, I renovate it, put it up for sale, market correction happens, not selling, drop the price, not selling, drop the price. Well, now I dropped it to where I go any lower, now I'm writing a check, right? I'm losing money. So instead what I do is I sell it on land contract. Now, land contract they're very popular in Michigan. The technical is executory contract. It's where it's similar to seller finance, but not quite. They actually hold the deed in escrow until it's paid off.
Interesting. Okay.
Yeah, they call it. There's all kinds of different names. Contract for deed. I forget all the different names, but in Michigan, it's called a land contract. And so now I sold my property to a buyer at 7%, $178,000, 7% on a 2-year balloon. So it's only 2 years now that I got to carry this thing. And so now instead of writing a check and losing money to get it down to where I would sell it, now I'm holding it. Now you got to have your entry money's got to be right if you're going to hold something. So if you're on hard money, but I tell people, go talk to your hard money lender. Tell them what's going on. They want to have a conversation. They don't want you to go dark and they got to foreclose on you. They would rather talk to you about what to do. Or take out your hard money with private money. Tell your private money, we need to stay in this deal a little bit longer, but here's what I'm doing about it. So on this one, I stayed in the deal. I'm going to hold it. Now I'm earning cash flow because I'm getting 7% on my, and that's on 178, not my number, right? So it's really higher, and I'll wait it out. He's got 2 years. He'll refinance, pay it off. So I'd rather do that as my exit than sell at a big loss on that particular deal.
Yeah.
But it's just getting creative with what the market's throwing at me.
No, I know, like around town in Phoenix where we're at, you're seeing a lot of flippers take 50, 60, 70K
Big haircuts.
losses. And I think, get a little more creative. And creative is something that's been coming up a lot in conversation, I feel like this year and the past few months, a lot more than like the previous 2 years, where everyone seemed really dialed in on flipping and wholesaling. I know watching your channel, you've always kind of talked about creative deals and creative structure. Where are you pivoting more towards creative deals here in 2023?
Well, it's going to be a big part of our game plan. It has been it's always been a part of our game plan, but now it's a very big focus, and so much so that I'm actually dedicating a lot of content around it and talking about it and teaching about it, because I feel like with high interest rates, if you're a wholesaler specifically, let's talk specifically a wholesaler. If you're a wholesaler and you can learn creative on the acquisition side, you're going to kill it on your dispo, because investors that are buying to hold, if they can buy into a low or zero down creative deal, they will pay you a premium as a wholesale fee to get into those deals. Like I'm finding double what you would get with typical like a low cash offer wholesale deal. And why? Think about why. Well, if they can buy in essentially to a 4%, 3%, even 5% interest rate that the seller has in place, and they can take over that loan, that's huge in their cash flow projections versus getting into a new 8% loan.
Sure.
Right? So they're really interested in taking those deals. So now if you start creating creative deals on the acquisition side, and they don't even need to be zero down. Like a lot of my deals are 10,000, 20,000, 30,000 still going into the creative deal, but those are still amazing deals, because your cash buyer, let's say he's taken over a $110,000 loan, and he's bringing $20,000 to closing to the seller and $20,000 to the wholesaler. He's still picking up this amazing deal for $40,000 cash out of pocket that he would be having to buy with all the cash, get a new loan, right? All the things, and now he's able to build his portfolio. So I think that's just an amazing opportunity for wholesalers. Let alone if you're a buy and holder, then great, do creative and keep them. But wholesalers should be also looking at how to structure creative so that they can wholesale those deals.
Yeah. And do you think when it comes to like structuring creative deals, if you're brand new, I feel like wholesaling, it's pretty straightforward as far as like buy low, sell high, right? Like now, obviously, running those numbers, sometimes you have to know your buyers and know what's selling, but still, it's a pretty easy concept to grasp.
Especially, I have students that do 40% of Zillow, there's my price, that's it.
Right.
Like, there's no analysis.
Right, it's easy. I feel like when it comes to though, structuring creative deals, it's a little bit more advanced. You got to kind of know what you're doing. So like if you're brand new and you're just wholesaling and you're used to just like 40% and it's been easy, how would you transition into underwriting creative deals properly?
That's a great point, because every deal is going to look a little different. It's not cut and dry because you have unique situations. Is the seller behind on payments? Is there arrears that need brought up? And what kind of loan is it? Is it a loan that I want to be in? What are the nuances of that loan I'm taking over? Because let's say they have a 2-year balloon on their loan. You take over that loan. You now have a 2-year balloon on that loan. Are you okay with that? So now it's starting to understand how loans are structured, how to create new loans. Like there's kind of a lot to that. It can feel super overwhelming. Here's what I would say though, is it's all about understanding the cash flow that can be created out of that deal. And if you can create cash flow, meaning if it's a seller finance where the seller owns it outright and you're creating a new debt, or if you're taking over existing debt, that would be subject to. if you can understand just those two, just subject to and just seller financing, that's going to be 80 to 90% of your creative deals.
Yeah.
There's hybrids where there's a combo and there's all kinds of other things like land contracts and different things, but that's the bulk of them. If you could just learn those two, understand how that new loan or existing loan is their cash flow. Could someone rent it and make a spread on what the new loan is or the existing loan is? There's going to be a buyer that wants that you can wholesale to. So simplify it, definitely simplify it. That would be number one. But you've got to, and then the step two, I would say, would be where everyone gets tripped up is on the paperwork.
Right. People are like, I don't know how to do all this.
How do I create a new loan? How do I take over a loan? And honestly, I don't want to be dealing with all that either. So I get a good transaction coordinator, someone that once you structure the mechanics, like the overall bullet point of the deal, we're going to do this type of loan, we're going to do this type of interest rate. Once you kind of create that, I hand the whole thing over to a transaction coordinator.
Sure.
She steps in, I intro the seller and her, and I'm out. And they talk to the seller, they get the paperwork all figured out, they get the servicing and they get title on board and the loan and all of it. And I don't do that. I mean, you pay them $500.
Yeah.
Like, it's very inexpensive, very easy, and they're super specialized in it. They know how to do it. So you could learn all of that, and it wouldn't hurt to learn all of that and, invest in the time to learn maybe how some of that paperwork's put together. But that is not critical to doing deals, and especially in the beginning.
Yeah, I think that's huge. Like, I had someone, literally when I was driving here, she's a real estate agent, and she was asking me about structuring creative deals and paperwork and stuff, and I was like, anyone listening to in Phoenix, I work with Michael Rivera, and he's an escrow officer that just specializes in creative deals. I'm like, you don't have to really understand any of this. Just tell him, the outline of what the terms are, and he's going to keep you out of legal trouble. He'll do all the paperwork. He'll get it through title. But yeah, if you're in some small town, random state, and you try to just, say, hey, do you know how to do subject to or seller finance? And they might not know how to do it. So I think you got to find someone that understands the game. But if you do, you don't have to worry about all that stuff.
My transaction coordinator, I'll put a link below if you guys want. She's great. She's here in Phoenix, and but she does nationwide. And because I do a lot of virtual, so if I bring her a deal and it's in Timbuktu, wherever, I don't know a good title company, she'll do the research and find title that can close that out.
Yeah.
I love that. I don't want to do that research. So if she doesn't already have a relationship in that market, she will call title companies and say, this is what we're doing. Do you guys know how to do these? If you don't, if it's your first time, no, we'll call somebody else. And she does that legwork to find the right title company to close it. I love it. It's just, and now I'm on to the next deal. I just want to be a deal maker.
Sure.
Right? So I want to tell the seller, okay, tell me about your existing loan. Great. Give me a copy of your last month's bank statement, because that's going to have everything on there. It's going to have the interest rate, the balance owed, all that, their name, all of that. I get that from them. We agree on, okay, here's the price. Here's your loan we're taking over. All of that. Merge her on a call. Intro the two. Hang up, and I'm on to another deal. It's beautiful.
Yeah.
I love it. I'm even doing this, Ricky, I'm even doing this on my wholesale deals, like my straight cash wholesale deals. I got the seller. We agree on a deal. I'll call her, merge her in. She does the contract. My cash buyer. This is my TC. Talk to her. She does the assignment, brings everything together, title, all of it, because my time is more valuable than paperwork.
Yeah, it's an underrated part, I think, of this whole business. Like the newbie questions I hear all the time. I'm sure you get them too. A lot does surround paperwork.
Here's what I've learned in years of doing this. Part of our culture is we grow up where signing a contract is like a scary thing. It's like we hear the words legally binding. And people think, I'm putting my name on this contract. I better know exactly what's in this. Something bad is going to happen.
I'm going to get sued, this, that.
I'm going to get sued. I'm going to go to jail. If I sign this and something bad happens, I'm going to go to jail. No, you're not.
Yeah.
No, you're not. It's understanding what a contingency is in a contract, right? And it's really breaking down that this contract, this document you're signing is not this big scary thing.
Yeah.
Take the scary out of it, right? And so when you take the scary out of it, it changes everything in your mindset around how you structure deals.
Yeah, totally. I think it's definitely not something you should get caught up on. Go pick up the phone, go make the deal happen, and then let the rest, kind of play out.
It's the 5% of the whole equation is paperwork.
Yeah.
right?
Totally.
All of it is the relationship with you and the seller and you and your cash buyer. Like that's where the magic is happening.
That's where the money's at. So
That's where the money's at.
I love talking about deals. Do you have any creative deals that come to mind that were really sweet ones that you picked up?
Yeah. So, I mean, I'm taking an approach now where we anchor with low cash and then we follow up with some type of creative offer. So we are starting to do a lot of these. And this year, like I mentioned, I want to do a lot more. And so like one right now that we're working on is it's a Michigan deal. And it's in a market I know really well. I've done hundreds and hundreds of deals in this market. So I know this area, know this deal. And first thing I thought of was this might make a great Airbnb. So seller told me, he's like, yeah, there's some of that's going on in here and you can do that. I verified that. So he bought it a year ago. So 1 year ago, so he paid top of the market, right? Mm-hmm. He bought it for $277,000. That's the value. It's not a deal. He owes $277,000 or $276,000. Then he went and put $65,000 in renovation. So he updated everything. So it's got like brand new, and he did good. He's got brand new kitchen, updated the bathroom. So this thing is like a rehab. It's like ARV, not just like existing. But now he's way upside down because he spent this money and he already bought it retail. He was going to own it for a while, right? Mm-hmm. So his number to me is sub 2 at 276. He wanted the 65,000 on top of the sub 2. And I said, look, I can't do that. I can't pay that much. I can't bring that much cash to the deal. That doesn't work. Like that's way overpaying value. And I said to him, what's the bare minimum in cash you need? Because he's moving down south because he got a job transfer.
Okay.
This is a job transfer.
So needs to, but needs to relocate.
Yeah.
Yeah. Needs to go.
And he can't sell it on market because he'd have to list it for $325, pay commissions and closing.
Bringing all this money to
close.
Yeah.
It would sit if he had to go on market. So what's he going to do? He doesn't want to be a long distance landlord. So here we are talking. So he says, look, I need 15 grand. He started at 20. He said, really 15 grand. That'll get me moved down. It'll handle all my moving. But he said, but I just spent 65. I can't walk away from this cash I put in this property. So I said to him, I'll tell you what, I'll bring 15,000 to closing, cash at closing. But that other 50, remember 65, I give him 15. That other 50, I said, I'll create a second position note. So seller finance now. Yep. I'll create a second position note. But this thing has got to be a 0 down, 0 interest, 10-year balloon. You got to give me 10 years to pay this off because I don't know what the market's going to do. You know, this thing is going to have to go up in value over time for me to do this. And he agreed to that. So on one hand, people are like, Jerry, that's nuts. You're paying what is that? 276 plus 65 is what?
Yeah, 320?
Yeah, 325 or whatever it is. Way overvalue in a down market. Like the value could drop even more.
Who knows? Yeah, it could go down more.
It could go even more. Well, I went on what's that Airbnb DNA?
Yeah, where you could see what stuff's renting out for and stuff.
My buddy's
DNA,
buddy's got an account with that, and so I said run it through there. So he ran, and it gave me the average and all that. So I figured out exactly what my average daily rate is on Airbnb, what the average occupancy rates are. And this is, they do pretty good on there of dialing that in.
Yeah, I've used it before. It's pretty impressive.
Yeah, it's pretty good.
Yeah.
So then, okay, I run my formula. What is this thing going to make me with my sub 2 loan I take over? I got 0 payments going out on the second. That's just sitting over there waiting. Pay that off in 10 years. And now this thing should cash flow $500 a month. And all I'm coming out of pocket to get into this beautiful property in an amazing location is 15 grand.
Yeah, which go to a bank and try to do that.
Right,
it's not
yeah,
happening.
Like it wouldn't happen. Yeah, and he's at an amazing interest rate. So that's a deal that I would never buy if I was fixing and flipping or wholesaling. And so it's more than 15 because a student wholesaler brought it to me, and he wants 10 out of the deal.
So you're paying him an assignment fee.
So I'm paying him a $10,000 assignment fee on this throwaway deal that most people would not do. But I want this. It's a great Airbnb. I'm trying to grab some of those. I'm trying to hold on to some of those. And so I'm out $25,000. So it's not a 0 down deal, but I'm willing to invest $25,000 to get into this great deal that's going to create a $500 a month cash flow. So my cash on cash is amazing.
Yeah.
Right, if you do the math on that, what is that? 30%? I don't know.
somewhere close to that. And
Right?
and then I think 0% interest is pretty underrated too. Like for people don't quite like sellers sometimes.
Don't understand that.
They don't understand that 0% and 100% principal pay down every single month goes such a long way when you're evaluating the deal that you can't win all parts of the negotiation. So
24% cash on cash.
24%.
So here's how I did that.
Yeah.
I take the $500 a month cash flow, which is $12,000 a year.
Yeah.
Divide that by my cash investment of 25, 15 to him, 10 to the wholesaler. That's 24% annual cash on cash return on my 25K investment into this deal. And it's a great property that on top of that, it's got a full unfinished basement. That in Michigan, if you finish those basements, I could create 2 more bedrooms down there.
Way more square footage. Yeah. I'm from the East Coast, Jersey. It's kind of the same
I
thing
can
with
double my
basements.
square footage with that basement if I want to at some point. So anyway, I want to do that deal. So that's a creative deal that. But think about this. You're a wholesaler listening to this right now. If you knew how to present a deal like that to a seller on the phone, so let's say this was a lead that came in, you're a wholesaler, and he goes, I bought it a year ago for $277. I need $277.
It's like dead.
You'd be like, that'd be your fastest hang up you would ever do, right? You'd be done with that phone call.
Right.
This guy's making 10 grand bringing that deal to me.
Yeah.
Think how much of a game changer it is when you can start
right
to
now,
learn
dude,
creative.
a 10K assignment deal in this market, that's a pretty good deal.
On a
throwaway.
On an overvalue buy.
Yeah.
You're making a 10K assignment fee.
So
That's insane.
How does that wholesaler develop those relationships for that end buyer? Because I feel like a lot of wholesalers, they just don't know that there's a guy like Jerry out there or a lot of other guys in different markets that want to pick up these deals.
Yeah, I mean, this was great because he happened to be a student of mine, so he went through our process of because I want deals so people can bring deals. But you have to find those people. You have to network. You have to start talking to your cash buyers, and you have to start having these conversations around creative.
Yeah.
They're starting to really look at it. You and I have talked about this. Like, sure. I'm buying on creative. You're starting to buy on creative.
Yeah.
And so when you go to your cash buyers, you need to be asking them, hey, do you look at creative? Like, if I bring you a sub-2 or seller finance deal, is that something you want to look at? And what is your buy box if it is? How much cash are you willing to put into some of these deals? And so it needs to be part of your arsenal now in this business.
It's kind of like instead of just looking at, okay, this cash buyer likes 3.2s in Peoria or over here, it's like he's looking PITI at this amount with a little bit of spread here, so you could start kind of trying to figure out whose deal is this.
And it's not just on buy and hold cash buyers. So flippers too. So I got a deal. I walked it yesterday right here in South Phoenix, and this was an 82,000 sub-2 that was a complete hoarder, like almost tear down. I think it is a tear down, but that was a sub-2 to flip. So ARVs over there are 350, right? So I'm also doing sub-2 to wholesale. So you buy it sub-2, just relist it because you got it deep enough. Sub-2 or seller finance, bring in the cash to renovate, flip it, and hold it. Like all the same exits are with creative.
Yeah, so interesting. I mean, especially like you're notorious for flipping, right? Mm-hmm. Are you still taking on just like traditional flips right now, or are you solely focused on the
so this
creative?
year, my big move is post trustee sale foreclosures.
Okay.
So at the auctions, trustee auction, and when they don't sell and they go to the bank.
I've never bought one like actually at an auction. Now, I mean, you've been in
it's
the game
all online now.
20 years, right? I talked to a lot of guys who've been in, especially after like 08, 09, like that's how they bought a ton of houses. I've never really seen what that looks like.
It's right now. I mean, it's pretty cool. I bought 7 on Friday. I bought this morning before coming here. I bought 5, and what I'm doing, and there's lots of different ways you can look at stuff, but I'm still flipping these. Mm-hmm. And it's a process, but we're weeding through the list that's coming out to bid, that's coming out to auction, and we're just going after vacant, because what happens is when they're vacant, the bank will assign like an agent to it, and they'll get some pictures.
Okay.
Not very many. Usually there's like 5, but all I need is 1 or 2 to see the inside. And it's vacant, and if it's clean, doesn't need to be updated, but just clean, then that's a check. That's a buy box checklist. So vacant, then I go clean, and now I'm trying to buy those at auction at 50% of Zillow, 40 to 50% of Zillow. And my strategy is just buy, relist.
Right. Just
Trash them out if I need to.
clean it out, nice photos, get on the MLS
back on
to the
the
market.
MLS to the market,
Competitive
price aggressively,
price.
and play a bit of a volume game. But some of these have great spreads, so I'm pretty excited about it.
Yeah.
And I want to do as many as I can. I want to do 20, 30, 50 a week if the inventory feels like it's coming.
Yeah.
Like the list
that they're getting bigger.
Oh yeah,
those trusty
yeah.
lists.
And these are all over the place. They're down south in Alabama and Kansas and wherever. I don't care where. I just want to understand, can I buy deep enough to just turn these things? So,
and
that's a unique strategy.
Yeah, no, I love that, and especially I think with the market kind of downturning, all these like old strategies are kind of like coming back. And you've been in the game over 20 years, so. Are you seeing similarities or differences compared to like the last downturn in 08?
Well, this is way different than 08. I mean, it doesn't even compare. The inventory is a fraction of what it was. It wasn't subprime loans gone bad. It wasn't any of that thing. I feel like it's just, we're in a little bit of a correction. But unless we create more inventory, and I don't know that we are, we're not going to have a crash, and we're probably going to just swing back, maybe more stable. It's like, I don't
Phoenix
think
is down. We're at like 16,000
they're
now.
They're calling
We're
it
at
a seller's
22.
market. It's insane.
Yeah.
Like that was a very short window if it stays, right? So, I think it's a bump though. I don't think this is a big crash or a big correction. I mean, if interest rates come back down a little bit and just mortgage rates hover in the 5s, we're back. We're game on again.
Yeah, it seems very like dependent on what's the Fed going to do, and they're talking about. I mean, they have slowed down raising rates, but people also they're still raising rates even if it's slowed down. But I think if you start seeing them actually cut rates, I think you've had a bunch of buyers too that are kind of itching to get out of their current house into something new.
New housing's dried up. The new build is not creating new inventory. That's a problem.
Yeah,
it's a real problem. If we're not bringing on new housing, and all we're doing is trading existing housing, we're gonna have an inventory problem, which means we're not gonna see prices drastically drop.
Yeah.
The only way that happens is when there's a huge influx in inventory.
Yeah, I was talking to like an OG out here, Chris Iman, and he was like, last time he's like, dude, inventory went from 20 to 40 to 60,000, and I'm looking at I was getting nervous when inventory went from 3,000 to 20 pretty quick.
Yeah.
But then it kind of leveled off, and like I said, it's been coming down.
What is it, 16?
Yeah, 16, and now days on market are at 70 days, so less new listings are coming. But to me, that's a sign of it's kind of it's not going to leveling out, and you're not going to see crazy price drops, which I think that's good too for giving flippers a little bit more confidence.
But honestly, I don't care, Ricky. I could care less. If it crashes, I'm going to get just as rich this year because I'm going to write it down. I'll write it up, whatever, sideways, upways. I don't really care. Because like I said in the very beginning, I'm just going to adjust as it does whatever it does.
Sure.
So I'll just buy deeper. Because my opinion is as long as people live in houses, there's an opportunity to buy and sell.
Yeah.
And I don't think people are going to stop living in houses.
No, exactly. That's what I always say.
So it doesn't matter. Let's go down, let's go up, let's do whatever. I'm going to adjust what I do. So the how doesn't change, right? Or the what doesn't change. What is flipping, buying and selling, that doesn't change ever. How we do it is going to always change based on what the market's doing.
Yeah.
So if you're willing to change the how you do things, the what of a seller wants to get rid of it, a buyer wants to buy it, that fundamental principle never changes.
Yeah.
I love that. We're in a business that will never, ever go away.
Yeah, and I think especially you have all the tools on your tool belt. So whether it's going up, down, stagnant, this, that, you've been doing this so long where
I'm never attached.
You know how to, right.
I'm not attached to any one business model.
Yeah, and you don't have this huge like the guys that were having wholesale operations with 60 employees and stuff like that. They're kind of now getting bottlenecked and I don't know what to do. But you seem to always stay pretty small team and just kind of pick and choose your deals and do a lot of the work yourself. So I think it's big opportunities, if anything, right now compared to the last couple of years. A lot of it was almost who was the first one, or there were so many different buyers in the market that maybe not everyone was going to Jerry.
Yeah, I like to say every deal I do, I'm out of business. And that mindset means something only works as long as it works, and then it doesn't work. And as soon as it doesn't work, I stop doing it, and it might not work tomorrow. So I got to be ready for that. So I like luxury. But I'm not attached to luxury. If luxury is not a good model anymore, I won't do luxury. If flipping all of a sudden became the worst business idea ever, I would close down my YouTube channel and stop flipping, right? Because I'm just doing whatever is given to me from the market.
Yeah.
That's how I want that. That's what I would call an investor. I don't want to identify as a flipper, a wholesaler, a rehabber, a buy and holder, an Airbnb. I don't want to be identified as any of those things. I want to be a real estate investor. And to me, that means you do what the best opportunities are.
Yeah, opportunity comes to you, and you figure out what's the best way for me to profit off this deal or hold, whatever it might be, but just being able to do it all.
That's right. How do I capitalize on what the market gives me?
Yeah, I love that. I got one personal question for you because like I said, I always look for people in my industry of like whose life do I want to have and like look up to, and you're one of the guys, right?
Oh, thank you.
And I also see you have a huge family. How many kids do you have?
10 kids.
So
10 kids.
I want to know.
Same mom, same dad. So it's not a blended family. Same
Right.
mom, same dad, no twins.
God bless your wife.
Yeah.
Jeez.
Yeah, she's a rock star. She's
Right.
amazing. Yeah.
But I want to know, like, I mean, you have 10 kids. You're living out in Puerto Rico. You're traveling a lot.
Mm-hmm.
You make so much content. You're buying all these houses. Like, what does your day look like? Because I feel like I'm busy and I want to have a family one day. But right now, I feel busy and I have no kids.
Yeah, I'm not the best at it, but I try to be all in with whatever I'm doing. So like if I'm working, I'm hyper focused on work. When I'm with my kids, I try to not be working and be hyper focused on my kids. It's hard to do. Like, as an entrepreneur, your brain is always working
Always
on
going.
the business. And I've definitely had times in my career where I wasn't very balanced that way. But one thing that's helpful for me is, as a very driven entrepreneur, winning is like important. I want to be the best at what I do. If I'm going to wholesale, I want to be the best wholesaler. If whatever I'm doing, I want to be really good at it. And so what that means is I have to define what that means. I have to define what winning means. And so I've had to redefine success as a little bit differently than I have in the past. So it's less a bank account. Mm-hmm. I mean, I want the bank account. I want to continue to make more money and continue to grow. And that definitely is a factor. But my relationship with my wife, my relationship with my kids, if I can set that up as the pinnacle of winning in life, then now it dictates a lot of the decisions I make.
Yeah.
And so it means I have to say no to a lot of things. If I take on a new adventure or new venture, if I can't set things up to where I'm not the operator, like I can't be the operator anymore. Mm-hmm. So no matter how good the opportunity is, if I can't create an operator that's going to do the heavy lifting,
Yeah.
and I take more of a backseat role, then I have to say no, because it's going to start to jeopardize the time I want to spend with my family, right? So
Yeah.
it's not an easy thing. It definitely has taken time. There's a phase where you grind, and if you're in that grind stage, you just got to do it. But I'm always thinking about, how do you get out of that grind stage? How do you create processes and systems and get the right people and the right team, the right structure, so that you don't have to do the heavy lifting? And so I focus quite a bit on not doing the heavy lifting.
Yeah, that makes sense. And it's like I'm the same, like East Coast, grind, hustle mentality. But there comes a point where I think when you define success, you have to look beyond just how many deals you're doing and how much money you're making.
Yeah.
And to me, it's like the guys that have these big families and all these kids and doing cool things, traveling, but also still like crushing deals and making a bunch of valuable content. So love seeing you do it, man, and keep
Thank you.
inspiring. And hopefully, one day.
It's not easy. I'm not good at it all the time, but I try. So I think if you're just constantly trying, that's doing the best you can, right?
Yeah, that's all you can do. So I thank you for coming on the show today, man. I appreciate it.
Thank you, Ricky. It was great to be here with you and have this conversation.